China's international debt crisis. It's one of the world's greatest countries and has the world's second largest economy today. In recent years, likewise, China has been expanding the sphere of its influence internationally by rendering economic aid in the form of loans to developing countries, especially in Africa. And this plan was called the Belt and Road Plan by the Chinese and has been China's main vehicle for global dominance. Many African countries were beneficiaries of China's loan disbursement, but like China today, they're presently battling a crushing debt crisis. Do stick around as we detail the intriguing story of China's international debt crisis.
Even if there is no debt trap, there's a lack of transparency about Chinese loans to many developing countries.
Although China claimed that its Belt and Road Initiative was designed to help advance China's partnership with developing nations across the world, it appears that the Asian supergiant has fallen way short of its objectives. As far back as 2016, China commenced what would metamorphose into a seemingly unending spree of lending to developing countries globally. While its proposal of the improved partnership was clearly understood to be a ruse, China's sinister and rather real objectives would soon begin to become apparent. Specifically in 2016, China assisted Tajikistan in building a power plant that cost a staggering $350 million. The agreement between both countries was that Tajikistan would repay the loan within a 3-year duration. However, when Tajikistan couldn't repay its loans, the Chinese government took over the country's gold mines as compensation. While Tajikistan has been unable to repay this initial loan, it has taken more loans from China, which has now led the CCP to take over control of even more of the country's natural resources. And like Tajikistan, Sri Lanka is also heavily indebted to the Chinese government. And Sri Lanka was indebted to the Chinese government by over $12 billion. And the country fell into bankruptcy, especially as its corrupt politicians are prone to mismanaging public funds. And when the country couldn't pay its loan, the Chinese government took over its seaports and other important assets and resources. And there are countless other stories where China has taken over control of the assets and resources of other countries due to their defaulting on loans. Questions are now being asked about why China gave out these loans to these countries without a proper assessment of what the money is being used for. Several probes are also now being conducted by the international community into why the Belt and Road Initiative was even launched. Well, it appears that China was only concerned about growing its influence and power in these developing countries. In 2013, China was one of the fastest growing economies in the world, and it was even becoming bigger than the US. China was an extraordinarily rich country, and amidst all these riches, the Chinese Communist government, headed by Xi Jinping, launched the Belt and Road Initiative, a $1 trillion project under the guise of offering help to developing nations. So far, it has loaned out $1 trillion to over 100 countries. This is a ridiculously large amount of money, especially when there is a chance that countries might not be able to pay it back. And the CCP understands this and had successfully utilized it to influence policies in many of the countries that benefited from their ridiculous loans. The best option for developing countries to get loans has always been the World Bank, but China was soon to change all of this. The World Bank has a completely different approach to giving out loans and puts ample measures in place to prevent these loans from being diverted from their primary purposes, a situation that would result in a plethora of bad loans. China's loan process is a lot less rigorous and much faster. The Belt and Road Initiative does not come with as much scrutiny, and all these nations have had to do to get a loan from China is just request one. In Africa, China has also seen a lot of its benefactors on the continent default on their loans. Chinese presence and influence across Africa's vast landscape are increasingly becoming more evident. For context, China was able to set up a military base in the small country of Djibouti, and the country is a beneficiary of China's initiative and is considered one of the busiest maritime trade routes with direct access to both the Red Sea and the Indian Ocean. China now has a stake in the country's port, owing to Djibouti's failure to pay up its debt. Also, according to a recent development, China built the headquarters of the African Union in Ethiopia. One would assume this to be a business partnership between the African Union and the Chinese government to foster international relations. But no, it turns out that the Chinese company responsible for handling the project bugged the whole building and its information servers. This automatically would mean that the CCP would always know whatever plans or agendas African leaders discuss. with this necessarily increasing the scope of China's influence over Africa. China gave out many loans to African countries, but the terms of these loans are quite questionable. There were many clauses and strings attached to these loans, and most were in favor of China, as would have been expected. One of the most common terms usually found in these loans is that whatever project is being funded by these loans must be overseen or contracted to Chinese companies. So whatever structure of infrastructure the country was trying to build, the CCP would easily bug it. Also, workers that worked on these project sites were Chinese and had to be transported down to Africa to work. The accommodation and feeding of these workers were also being serviced through the loan, which meant that most of the money being lent is still being paid back to China indirectly. A larger percentage of China's loans to these developing countries have ended up being bad loans, especially as the investments are not always feasible and have little to no commercial value. The corrupt practices of African politicians have also not helped matters, greatly affecting these countries' ability to pay back these loans. Another factor is the repayment terms that are peculiar to Chinese loans, which are often very harsh. You see, if an African country was to get a loan from the World Bank, it would come in at about 1 to 3% interest, with a payback period of up to 30 years. However, Chinese loans are a bit more aggressive. Interest rates are usually set as high as 7%, and they have a lower payback period that is usually not exceeding 15 years. And the conditions of these terms are usually the reasons why African countries similarly struggle to pay back their loans and end up giving up ownership of valued assets when they default. When news got out about China's loan practices, the CCP became more cautious with its terms due to the bad publicity it received from mainstream media. So China went as far as to include its loan requirements that countries are not allowed to disclose the details of their terms to their citizens. What this implied, in essence, was that an African country could borrow tens of millions of dollars and its citizens would have no idea the extent to which their country is in debt and other conditions surrounding the loan. Due to China's aggressive lending practice, it's now become the largest creditor in the world, disbursing close to $1 trillion. And as things stand, China's economy is now being negatively affected by its aggressive lending policy. You see, while China gave out a lot of loans, it didn't expect that many countries would default on them. And although the outbreak of the COVID-19 virus did hinder a few countries from paying back their loans, and from 2020, China became at risk of losing over $52 billion to bad debt, with this being more than 3 times the size of their bad debt in 2019. Additionally, China was forced to give out bailout funds to aid its debtors and keep these countries from defaulting on their payments during the global lockdowns. China is now facing a great deal of economic turmoil at the moment and is on the verge of a recession itself, with its present predicament largely accruing from the mortgage crisis presently plaguing the country. In China, real estate represents more than 30% of the country's GDP, and China is currently facing its biggest real estate crisis ever. As property builders and developers run out of cash to finish properties, many buyers in China have stopped making mortgage payments on incomplete homes, and this has put a strain on the Chinese economy. There are many mortgage boycotts, and this is affecting the country's growth and performance. It is interesting to know that China has never missed its GDP growth target once in the last 30 years, but due to the ongoing domestic issues, it missed its growth target of 5.5%. In China, many officials were not happy with President Xi Jinping's move to hand bailouts to debtors during the global pandemic and warned of tough days ahead for the country. But China needed to maintain its influence on these countries and was left with no choice. And as it stands, China is on the verge of complete economic collapse, and its increasing reality of imminent bad debts has done little to help matters. What's increasingly becoming apparent is that China's plan to influence the world and attain global dominance is currently on hold, and this situation isn't about to change anytime soon.